Welcome to Petros Family Wealth. Today I want to send out a quick note about absolute return downside protection. And just as a reminder, as we're going through some of these examples, this is not a recommendation for you and your family, and it's not a past recommendation for some of our clients. This is purely an educational video to help arm you, educate you, and help you become a better investor when considering structured products. So today we're going to touch briefly here on absolute return structured notes. And what that absolute return is, it's a form of a downside protection. And we have another video of a couple different types out there that I'll put in the description. But the way this one works is it'll be a kind of a throwback to your middle school or high school days in regards to absolute numbers. And so let me describe as an example the potential benefits of an absolute return. And so here's an example of a note that was 5 years in length based on the S&P 500 and the Dow Jones. You have some upside participation on the worst performer. And on the downside right here, it has an absolute return up to a 30% barrier. Again, just briefly on a barrier, that's a cliff protection or soft protection, meaning that at the end of that 5 years, if the worst performer is down 30% or more, while the investor is down 1 for 1 on the downside, so it kind of cliffs off. However, with this absolute return sleeve, if at the end of the term, let's say for example, the worst performer is down 20%, well then the client would be up 20% on the positive side. It's the absolute number of that negative return at the end of that 5 years. And so here's an example. If the market were to go down, you could see that if the S&P 500 is down closer to that 16%, and if it were to mature at the end of that term, well, the intrinsic value or the return that the client would get or the investor would get at the end of that would be that positive almost 16%, 15.72 in this hypothetical. And so that's the benefit of an absolute return. And generally for folks or investors that are looking for some of that downside protection and the possibility of having a positive return in a down market over the course of time. So I hope you found that helpful, and if you did, please go ahead and like, subscribe, and hit that notification button. Thanks so much.